With the Benefits and Services Committee. Carolyn, roll call.
Mr. Boykin, representing the State Treasurer.
Here.
Dana Dillon.
Here.
Michelle Zumot, representing the State Superintendent of Public Instruction. Here. Mr. McGuire, representing the State Controller.
Here.
Madam Chair, we have a quorum.
Great. All right. Our first item is the approval of the committee agenda and work plan.
Move approval.
Second.
All those in favor?
Aye.
Opposed? Great. We've approved our committee agenda. Item 2 is approval of the minutes from November 8th, 2012. Hopefully you had a chance to read over them. Can I get a motion to approve?
Move approval.
Second.
Okay. Those in favor?
Aye.
Opposed? That's okay. I was too fast for Michelle. That's all right. That's all right. Great. Item 3. I think that's we've got Rick Reed and our adoption of factors. So, Rick, take it away.
Thank you, Madam Chair, members of the committee. Every year the committee and the board subsequently adopts various types of crediting rates and borrowing rates and contribution rates for the plan. And so we're here today again recommending contribution rates and rates for fiscal year 13-14, and with a couple of exceptions because there is a new program under PEPRA. We're recommending rates for the remainder of the current fiscal year. I don't know how you would like to take these. There's all separate resolutions. There's a group of those, the regular interest rate, which is basically a borrowing rate for members who may purchase service credit or credit and pay for it in installment basis. They are charged 7.5% currently. The credit and interest rate is the amount that member accounts are credited. The minimum interest rate for both the cash balance and the defined benefit supplement are the crediting rates on the accounts under these programs.
What's the pleasure of the board? Do we want to just have Rick present all of them and approve them together, or hang on a second, Terry?
Madam Chair, I have a number of questions on a number of these, so I'd like to possibly do them one at a time.
Absolutely. Sounds great. All right, one at a time, Rick.
So first for the regular interest rate, again, that's a basic borrowing rate. So if a member purchases a service and they purchase it in installments, and the amount that they owe is charged 7.5%, which is the actual assumed rate. And that is basically under section 22162 of the Education Code. So that's pretty much it. I'm happy to take any questions on that rate.
Okay. Questions on that one? That one's pretty straightforward. Any other questions from the committee? So, do we move to approve that?
Yeah,
Is that
staff
okay?
recommends that the
Okay. So
committee
move.
approves that rate.
Oh,
I move approval.
Second.
all those in favor?
Aye.
Opposed? Okay. So
Okay.
number 1 is approved.
So the next rate is something called a credited interest rate. And what that is members make contributions to the plan to help pay for their defined benefit program. And those contributions are given what we call a credited rate. So should they leave the program and take their contributions that they contributed to the plan with them, they get their contributions back plus the amount that's been credited under this credited interest rate. And the amount that gets credited every year is defined in statute, and so we make the computations. And this year, it's the credit interest rate is 0.5%, which is not very much, but it mirrors something of the passbook rate and the 2-year Treasury. So staff is recommending that the committee adopt that rate for fiscal year 13-14.
Rick, I have a question from Terry.
Rick, I'd like to ask, is the rounding up to the next 0.25% defined in statute, or is that a policy?
That's a good question. I believe, and I'll have to check that.
Terry, it's a board practice. We're actually trying to go back to, it was initiated in 1991, and we're trying to go back, looking at the minutes to see what was the derivation of that, but it's not a statutory rate.
Yeah, it's not in statute, so I think it's yeah, it's been a board practice.
And basically, the payment or crediting of this amount, essentially, if it's ever being paid, represents an expense or withdrawal from overall trust fund.
Yes. Yes.
I would like to ask, I appreciate, the practice of always rounding it up to the next 1/4%. But actually in this low interest rate environment, it's not a big difference between 1/4% and 1/2%. But still, that represents a cost to the trust fund. And I have to question whether or not it makes more sense to just round up to the nearest 1/100th or 5 basis points or something, instead of effectively doubling it in this low interest rate environment, because it represents a cost to the plant. I'd like to raise that as an issue for possible discussion. I don't know whether this committee can take some action to change some policy at this point in time or not, but I wanted to raise that as a concern that I'm not sure has been possibly addressed during at least the state controller's time on this board.
Yeah, I mean, there's a couple of options. One is, you could adopt the rate for now and ask us to take a look at it in terms of the future, to go back and take a look at, well, first off, I think it'd be helpful to know what the cost of this is, because quite honestly, this only has an impact on the fund to the extent someone takes a refund. Because if you take a benefit, the crediting doesn't matter. And that's true with a couple of other ones as well.
Take a payout at death.
At death.
Right, or return of contributions and interest, right. So, I mean, it's a relatively limited impact, but we can certainly get that information. So you could either adopt the rate now, and then we could look at that in terms of the future, and over the next year, come back to the committee with that. Might be the best way to go. I mean, the other option is to not act now and come back in June, but that basically gives us very little time to implement the new rate.
What was that?
Is to not adopt the rate now and have us come back with that information at the June meeting and adopt the rate however the committee wants to adopt it, but that means that we'd have to implement it very quickly because it would take effect in July 1st.
It makes it a lot more difficult.
It's just, yeah, I just worry about the challenge of basically a 3-week time frame of trying to get the new rates built into the system and.
Well, I guess in some respects, we don't even know how difficult that is. It could be very simple.
It could be. No, it could be. I'm not saying it would be difficult. I'm just saying it would have to be. I don't know what the time frame is. Normally, we do, in terms of, we obviously every year we plug in a new rate because it changes every year. But there's testing involved to make sure it's done right. And normally we have 2 months. In this case, we'd have 3 weeks if we waited. And I just can't tell you at this moment whether or not that would be a challenge. How much of a challenge that would be.
If there needs to be some correction, then it might take a little bit extra time. So it's not clear. You may be able to do it, but doesn't give us any cushion.
Dana, do you want to speak to this
I can't
issue that
hear you.
Terry? I'm sorry, I asked, do you, Dana, want to speak to what Terry's raising?
Not until Terry's done, I'm good.
Are you- Go ahead.
Go ahead and put him back.
Sorry, Terry, I somehow accidentally got you out of the queue here.
I agree with Terry that taking a look at it, I would like to take a look at it. I think that finding out, I don't necessarily want to move to change it now, but I think, approving what we have as recommendations now and then moving forward, but then spend the next, whatever time it is, taking a look at why we went to rounding up to the quarter and instead of another figure, and that might possibly take a little bit longer time between now and June and everything else we're asking staff to do. So I agree, taking a look at it is a good idea. But I think doing that after we've already approved these, before we approve the next set, would be the best way to do it.
Okay.
So, you have a specific recommendation? You're basically suggesting that we should adopt this. You would recommend that we adopt it at the present time and evaluate it with more information for the next reset in another year.
Can I clarify even, just to be more specific, to say that we could approve the staff recommendation now for the credited interest rate and ask staff to give us information about what is the cost? And also, I do think it would be helpful for us to go back to the 1991, sort of have some context about the board practice, kind of about the rounding process, and I think revisit the conversation. So, is that amenable, Terry? Or?
That's fine, Madam Chair. I'd like to just point out that I have the same comment with regard to about 4 other of these items. So I won't repeat the conversation.
Okay.
But
You can just say ditto at the appropriate time.
So we'll incorporate the comments in the other,
And the review.
the next few.
And the review.
And the review, right, exactly. Is that,
Madam Chair, but I do have a different comment on one item.
okay, can I just finish then to get clarity on, is it it's a different item though, Terry, not
Yes,
number 2,
that's
right?
correct.
Okay. So just to clean up number 2,
Well,
Go ahead,
it's on this item, it's a different interest, you're talking about different interest rates on the DBS and the cash balance rates.
It's actually item 5.
Oh, is it, oh, okay, I'm sorry.
Permissive service credit.
Ah,
So that's the different
Okay.
comment.
but can we just, Ed, can we just finish? Okay, so with number 2, with the credited interest rate defined benefit program, just for clarity. Dana, do you want to restate your motion? or-
I can just move the recommendation.
Okay. All those in
Yes.
favor?
Aye.
Aye.
Opposed? Great. So we approve number 2 with the staff recommendations to do follow-up.
And so, the next one is the minimum interest rate for cash balance, which is the amount that members are actually credited on their accounts. Now, it's a little bit different because in the cash balance plan, your benefit is the account. And so this is also, it's based on a 30-year treasury. It's also rounded up. So staff recommends adoption of that with the note they will come back and study different rounding techniques.
Did you want to? Dana, do you have?
So move.
Second.
All those in favor? Opposed?
And so there's a minimum interest rate for the defined benefit supplement program, which is also the amount that members' accounts under that program are credited. It's based on 30-year treasury again, so a similar recommendation with the note to study different rounding of that also.
You got it?
So staff will recommend adoption
Dana?
of that.
Move the recommendation.
All those in favor?
Aye.
Opposed? Great. We've moved.
Okay, so those are the credit interest rates. The next one is the purchase of service credit. Now, that's changed a little bit because under the new law, members can no longer purchase what is commonly referred to as airtime. And it's called airtime because it's service purchased that is not based on service worked. And so it's the equivalent of you going to an insurance company, giving them money and purchasing an annuity. And so even though the conception has been throughout the state by many that it's something given for free, members actually paid the full price of this, the full actual cost of this, and it was sort of the equivalent of going to an insurance company and purchasing an annuity. That's no longer allowed. But members are still allowed to purchase a number of types of service credit, most of which is based on service that they've already worked as a educator. Others is service worked with other systems, and then there's some military and other types of service that is worked, and members are still allowed to purchase that.
That's what we call permissive service
So we
credit,
call it
correct?
permissive service credit. So the pricing of that has been a little bit different this year because in the past, we have looked at all of the prior service purchases, including airtime, and we based the cost on the total package of all of that. This year, we excluded airtime, past airtime, and we've just looked at past service purchase credits to try to set a rate. So that's a difference. So there's a difference there in the two in the cost. There's a small difference in what the cost would have been without airtime. And then secondly, we've also split our recommendations between under the prior plan, prior program and under the new program. Now, we don't have any experience in the new program, so we've made a number of assumptions. And that's basically as members are going to behave in their purchase, service purchase, and they're going to also behave as members behaved under the old plan. So based on that, we come up with a set of recommendations for service purchase credit rates for members under the new plan. We will continue to review that and look at as experience comes in. So it may actually change. So it may actually be different under the new plan, but we'll look at that as times go. Lastly, under the new plan, if members wanted to purchase service credit today, there is no rate because there was not a rate set last year by the board. So we're recommending that the rate under the new plan be adopted immediately and for the next fiscal year. So with that, I'm happy to take any questions.
Looks like we've got a couple questions. Dana?
How did we not do that?
We didn't set a rate last year?
We set a rate under the old plan, but we didn't have a new plan last year when we set a
Okay, I
rate.
get it.
So,
Okay.
so when Pepper got
I can
passed, there's no
understand
rate.
how that didn't happen then. Rick, I have a question. A person asked me this past weekend about purchasing permissive credit. And what she was interested in doing is finding out what the estimate was and going through with doing it, but paying part of it in a lump sum and then the other half with payments. We don't have that option, do we? They have to pay all of it?
No, they can pay
So
it in
they can do
installments.
both?
Sure. They can pay it in installments.
Well, they can they pay part of it in a lump sum
Yeah,
and then the rest
sure.
in installments?
Sure.
Okay,
That's what I
thanks, because she didn't think we could and I wasn't sure. So, alrighty, thanks, I appreciate
I'm
that.
glad that we give our members that option. That makes it a little easier to do. Thanks. Okay, Terry?
Thank you, Madam Chair. My concern with this one is actually quite a bit different, and that is the wide range of the age groups, 10 years. There's quite a spread differential in the percentage cost for these 10-year age groups. And I know it's possible to do it by age every year. Or it could be done in 5-year age groups, which would have that spread, that interest differential reduced to some extent. I'm concerned that there's too much opportunity to just game this in this environment, and I would suggest that this committee not take action on this item at this time until we have a narrower age group and new rates to adopt for this program.
A question, I guess, have we used these age groups? Has this been common practice for us to use these age groups with permissive service
There was a
credit, or-
there was a time when we took each individual by age and ran it through a calculation actually. So if you were, 23 versus 24, you got a different rate based on your age. So we did it by, we did some calculations by every age.
Actually, that was only for airtime, though.
That was for
That's just for airtime.
Yeah, and normally, in the old days, before we had this change, it was one rate for everybody.
Yeah.
And then we went to a tiered system, I think, maybe 10 years ago. I think it actually says in here somewhere where we started doing that.
So, yeah.
2001.
So for airtime, we did, there was different ways. So for airtime, it was every age. For permissive service, there was one rate. And so the board thought that they actually should be the same, since when we looked at the study, they're basically the same people, the same group, and so it didn't make sense to have two different ways to calculate the cost. It is just an administrative issue, and I'll let those guys speak to that.
Is the
It's
tiered
possible
system
to,
So this is the tiered system?
this is the tier
Yes.
system.
The
Yeah.
10-year?
So
Right.
it's just based on a policy.
And that policy was made 10 years ago? Is that what you're saying, Ed? Or approximately?
2000.
About
2001, I
2000,
think.
well, I don't know,
2003.
I think 2000, yeah, 2003.
Yeah.
It says in there, so.
And Terry, let me just understand what the
Excuse me?
controller's office, so it's the need or the interest in having it be broken out either in small increments, either per year or in, 5-year increments.
Well,
What's the rationale?
This goes to the issue of ensuring proper funding of the plan and, the costs associated with the benefits on an individual basis. And from my perspective, I know that these age groups of 10 years is extremely wide from my perspective relative to this type of benefit. And I would not want to approve it with this wider range. And, at this time, I think it's time where we narrow this going forward.
Okay. Do you want to speak? I've got Grant in the queue.
So I just want to, we've had a quick conversation on the implementation issues of changing this at this point. And I think from an automation perspective, there would be struggles to get it done. That's not to say that we couldn't calculate it outside of the system, but that brings internal control risks. So I just wanted to alert you to the fact that it, given the timing on it, actually making the change within START is probably not something we could achieve. We could create an external process to price, these are creating bills, so we could somehow work that through. But obviously that's taking something outside of the system, and so it creates other kinds of internal control risks that we would just need to mitigate, that's all. And I'm not disagreeing with the pricing comment, I'm just letting you know what the implementation challenges might be.
And I also, go ahead.
And if I could just add to that, I think we also have a customer service challenge, because to the extent that those rates are changing and we're not forecasting that for the membership,
Right.
what those new rates are going to be, I just anticipate that we will get significant member reaction to that. I mean, I know they're going to
Right.
change, but by doing this now, we can actually publicize what those rates are, and then people can make a decision about whether to initiate a purchase now or later. And I recall that 10 years ago when we went to the 10-year or the decile structure for the purchase of service, that we had a notice period before that happened, and we were inundated with workload, and it took us many months to work through all of that. And we're still currently struggling with some of the inundation of workload from the elimination of the airtime purchases. So there are some workload implications that we would have to just factor into that as well.
Yeah, and I think, if I may comment, Grant, and then, that's definitely one of my concerns, is just, I think, when we think about our members, we just want to give them as much information as they need to make good choices about planning for their retirement. And so I think that would be my concern about making a decision or delaying a decision now, is we're not giving that lead time to our members. But I think it's worth, and I guess I can make a proposal after hearing from Grant. I have ideas of how we might be able to kind of look at that. So Grant, do you want to chime in, and then I can?
Sure. Do you want to?
Oh, sorry. Let you talk on the mic. Sure.
So understanding the implementation issues, I agree completely with Mr. McGuire that if people are savvy enough to purchase service credit, they're going to look if they're 48, 49 and say, I better do it before I get into the next bracket. So however we can do that, we ought to look at that.
Sharon?
So, go ahead.
I'm sorry, excuse me, I didn't mean to interrupt you. I
No,
just
go
wanted
ahead.
to say that, from the conversation I've heard as relatively unschooled in this issue, but it sounds like we're talking about savings to the plan and costs of implementation. And I don't know if it would be possible to ask staff to come back and quantify that for you.
That was going to be my suggestion, so
Okay.
we're thinking on the same page, yeah. Because I think, again, I think having, more information about, there's a couple issues, I think. Issues around our members and just lead time and informing them if we do make a change, what the lead time would be. internal risk and maybe being able to kind of get a little more specificity about what the internal risk would be. And then, what was the other one? I think the membership, internal risk. And then I guess I'd like to know a little bit more about the potential cost saving if we do parse it out to a 5-year or a per year kind, what that would look like in terms of, I don't even know how to qualify it. But to your point of like the cost savings to the plan, what that would look like. Does that make sense? Or do you have a different?
I'm not sure that that could be calculated.
Right.
It would be a difficult number. I mean, we could probably come up with some estimates. I'm not sure of the reliability. And part of the reason is that people do make decisions based on how much this is gonna cost me.
Right.
And so if a person in a range that is now affordable and then we change the price of it, they may make the decision not to purchase at all. And so the behavior changes the cost of it for a system. And then we don't know if that person who's purchasing that is actually a candidate to get the full benefit. So it does become difficult because you have to include behavior changes.
Well, the other issue I heard you raise that I hadn't written down, but you had mentioned, Rick, that we need to make a decision about the 2% of 62 folks, right? Because we didn't make a decision last year. And so folks this year that are under the new PEPRA, if they want to buy permissive service credit this year, we need to know what.
Yeah, between now and July or whatever, yeah, there's no rate for 'em.
I think too, I'm reticent to make, a significant change like this without, I know as a fiduciary, I just need more information to substantiate or be able to kind of make a change that would affect members in this way. And so I think that's my reticence to, perhaps we could approve number 5 now and then ask staff to give us more data, or if Terry, if you want to give more direction to staff for information that would help us make a decision for next year. But I think in terms of the members, I'm reticent to make a decision now based on the lack of lead time for folks to be informed about that. So, Terry?
The new rates for the new plan, basically, that's for new employees. So they wouldn't be eligible to purchase any of this type of credit at this time anyway, would
Yeah,
they?
generally, and we thought so, but we thought of every possible situation where somebody may have come from another state and want to purchase, who may be new to this plan, so they may be under the new 62 plan, but they may have service under another plan from another state, so they might be eligible to purchase service.
But we're not talking about a large number.
We would not be talking about a large
I would
number.
think it would be rather small.
Yeah.
And I'm not aware that we've had any requests to date.
Therefore, I really don't have that concern relative to not having those rates in place at this time. And we do have rates in place right now for the existing program.
We do.
But we wouldn't have rates in place if we took no action now, I guess depending upon when you would bring this issue back, we wouldn't have any rates for next year either.
For 13-14.
For 13-14. Either for the existing membership or particularly for the new membership. There's absolutely nothing for the new membership.
Madam Chair, I would recommend that we adopt these rates right now, but give notice to members that we're going to change them possibly as soon as possible and have staff report back. And even if we have to implement something at a mid-year basis, we should consider that, and staff should have recommendations on that issue.
So just for clarification, do you want studies in 5-year increments or year by year, or how do you?
I know you can do both, and they're
Yeah.
probably just as both easily implemented. Probably relative to start, it's easier to do a 5-year as opposed to every year. Let's just see what issues staff wants to raise relative to coming back with us with this issue, because I think it's something that should be addressed in the near future.
And just that word giving notice could be a very expensive proposition. I just want to make sure we can honor that well, but also in a frugal fashion. I mean, there's no problem obviously doing a web-based communication on the website and that type of thing, but I assumed you didn't mean an old-fashioned letter going out to hundreds of thousands of people. That is significant money to do that.
I think we have some more discussion, and I guess I just want to get clarity from staff in what you're suggesting, Terry, that my understanding is we could approve 5, staff could get information, we'd have to come back at benefits and services and get, have you share that data, and then this committee would make a decision moving forward. So today, we're not making a decision, we're just making an information request about, we are making a decision to approve 5, but we're asking for additional information to potentially change
That's correct.
with notice.
I would make a motion to approve 5 at this time. But we would see at the next meeting, information
In
that's
June.
presented by staff, and at some point in time, even possibly mid-year next year, we might adopt new rates. I think we should evaluate that.
In terms of the timing of getting back to you, if we do it for the June meeting, it means we have to pull us together in the next few weeks, which would be problematic because of the board lead in. The next, I guess I'd suggest that maybe we do it in September and report back with the information, and then you can make a decision at that point about what you want to do, perhaps beginning in January.
I think that's appropriate. There's
Okay.
a lot of information, I think.
Yeah, we're looking at a lot of data here.
Yeah.
We have to gather.
So we've got a motion on the table. Michelle?
I'd be willing to second the motion, and it seems like we're getting closer to the end here, but, and with moving forward. But I just wanted to make sure I understood something that was said earlier about truing up the numbers and the cost that might necessarily make it more expensive and a member less likely to move forward. And so I just would want to make sure that any analysis might include those concerns as well,
Okay.
please.
Dana?
I think September's a good time. I just have a question, Terry, that we wouldn't, it's not like we're gonna notice now that we might possibly be changing it. We would actually change it and then send notice that we were going to change it, correct?
I think we should ask council to provide advice in that area relative to
Okay,
disclosure.
because for me, I think that if we provided notice now, that's way premature, because we're gonna get information and we might not decide to change it.
Right.
So until we change it, I don't think we provide notice, so that just would be my 2
I
cents.
agree with that. Did you want to chime in, Michelle?
I make a suggestion on that. What if you just adopt the rates for the balance of the calendar year? And then in September, adopt rates for the balance of the fiscal year, either based on the existing approach or the approach that, the 5-year tiering. That way, it's very clear that these rates are only good for this first 6 months, and then there will be something done in September for the following 6 months.
Okay. Dana?
I think that's a very good recommendation, and I would like to incorporate it into my motion.
Okay.
Okay,
Dana?
all right.
Any other comment? So,
Madam Chair, can I clarify the motion?
yes, you can. Thank you. Thank
There
you,
was a
Carolyn.
motion to approve the rates for the balance of the calendar year, and then to consider information presented at the September meeting and possibly evaluate, and then approve rates for the balance of the fiscal year.
Correct.
Motion made by Mr. McGuire and seconded by Ms. Dumont. Say it again?
At that time, we would consider that, yes.
And you'd have to adopt rates of one kind or another.
Yeah.
You'll adopt the same
And so would we
rates,
adopt the PREPA rates for currently, immediately for the balance of the calendar year? Okay.
But no notice will be made until after the September
We actually
meeting,
change it.
if any changes are made. Michelle?
My only question was Peggy's concerns about springing this on members and by not letting them know that that might be a possibility. Are we then just setting ourselves up in September for that same concern to be raised if we want to change it?
Yes.
But I think we can communicate what's going on in terms of these rates are only for the balance of the year, and the board's gonna evaluate the rate structure in September and come up with a rate, with rates for the,
Oh, that's good, Michelle. That's
Right.
good. All right, so we have a motion on the floor that's been seconded. So, move to approve, motion, or
Aye.
aye? Opposed, okay. So, Carolyn, you're clear on that? We good? Okay, all right, thanks. So we approve number 5. Let's see, let me get back to my board book.
Okay, so the next rate is what the employer pays for members who become elected officials. And typically, traditionally, by law, it's the normal cost minus the member rate. And so, and it's at least that amount. So, again, we've made the same calculations. The difference this year is we made calculations under both the prior plan and under the new plan. And so staff is requesting that those rates be adopted.
Any questions?
Move approval?
Second.
All's in favor?
Aye.
Opposed? All right, approved.
So the last set of rates in this group is rates for those in the reduced workload program, meaning that members near the end of their retirement can actually reduce their workload, but the idea is that they don't suffer in their pension plan. And so the employer makes up that difference. Again, it's the ongoing cost of the benefit that they're going to receive minus the member contribution. And again, we made allowances for the under the new PEPR plan. So staff is recommending that those rates be adopted and the PEPR rates adopted immediately.
So moved.
Second.
All in favor?
Aye.
Opposed? Passes, all right. I just had a question. So now, are we kind of using the language 2% at 62 for the PEPRA?
Yeah, CalSTRS 2% at 62.
Okay, so
I
that's
think is-
our,
yes.
okay, I just wanted clarity on how we're speaking of the new members, so, okay, great.
Item 5 is the lump sum benefit, lump sum death benefit. And again, we've gone through an analysis of comparing what basically.
Item 4, right, Rick? I'm
yeah,
sorry, just for
yeah,
clarification.
Item 4. Basic funeral costs with what our benefit currently pays. And I think the reason why we've gone through this analysis is that I think originally this benefit is to help defray final expenses for members. Again, due to the large unfunded, the actuary is not recommending any increase in this benefit. But we've gone through analysis of what it would cost to increase it, based on inflation or since the last time it was increased. At this point, I'm happy to take any questions.
Question? Dana?
I just wanted to express my thanks that we actually included in the item this time what the funeral costs are.
Yeah.
That's something that had been lacking in the past, and I definitely appreciate having that information, Rick. Thank you.
Any other questions? I'll entertain a motion.
I move staff's recommendation.
All those in favor?
Aye.
Opposed? Great. All right.
But it's what it is.
Yeah, I know. Pass. Thanks, Rick.
Thanks, Rick.
All right. Item number 5, Ed and Peggy.
The only thing I have is, we had shown you the new website the last time that launched in January, and now we're working on the mobile website, which is designed for smartphones. The iPad will just show you the regular website, but there's a website that's designed specifically for smartphones that we're in the process of rolling out. It'll be ready to launch in early May. it's very cool. They're still working on fixing it. I mean, on sort of making some tweaks to it, but it'll automatically detect the device and the operating system, so it delivers a website in an optimized version. If you want to, you can look at it, look at the normal website through the smartphone, but I would not recommend it because it's really hard to read that way. So, in early May, you'll be able to see in early May, we can actually show it to you. Because we have it in a test environment. You can take a look at it later on if you want to. But it's a very nice way of looking at the website. So look forward to that in the next few weeks. And that's all I've got.
I just wanted to give you just a very quick update. I don't have actual numbers, but I wanted to assure you that we are working diligently to plan for and accomplish the additional workload that always comes up as we launch into our peak workload period for service retirement. The vast majority of our members retire at the end of a school year. We're seeing those applications flow in. In the past, we've used students to help us process applications. We all lost students in September. Christine Campagna, our new director for service retirement, has worked within the organization to establish new positions that utilize seasonal clerks and MSTs, which are positions that we're allowed to use in the civil service ranks to help us get our resources aligned so that we can process applications on a timely basis. We're also seeing an increase in the number of applications that come in through CalSTRS. We're extraordinarily pleased because that doesn't require any additional work on our part unless there's a certain kind of a flag on that, like that requires us to take a look at it. But for the most part, applications that come in on CalSTRS are processed through the system, and members are assured of receiving their initial benefit on a very timely basis. We also appreciate members who utilize the online version in order to complete their application, even if they then print and sign it and send it in to us, because the online application eliminates the opportunity for member error or eliminates the most common mistakes. I mean, members could still choose unwisely and want to change that. We have an opportunity for them to do it, but they're not allowed to choose a member-only benefit and name an option beneficiary, for example. So those processes have been working very smoothly for us, and we're excited about them. In order to encourage members to participate in the online experience, we did remove the actual retirement application from the retirement guide this year and encourage them to go online to receive it. If they want the paper, we can provide it for them. The benefits counselors are all connected into this. I just spent 2 days meeting with benefits counselors in Southern California. They're excited. They had the opportunity to test drive the installation of and completion of an online application, and they're enthused and jazzed about it. So they're very willing to help coach members who are making those retirement decisions to utilize our online services. Our target for all online service use is to have at least 40% of the transactions that members can do done online. And we're exceeding that for some of the more common transactions, address changes, et cetera. We're not quite there for service retirement applications. I don't know that we will be there this year, but certainly our percentage of online applications is improving, and we have the cadre of staff in-house to manage those applications that are coming in through the mail. So I think we have a good process. I think that we'll continue to work through that application flow, and members will continue to receive benefits when they expect to.
That's great. That's great. I've actually been encouraging members to do the online retirement, and I've had so many colleagues in Los Angeles mention that they really liked the prompts because it does remind you, oh, you forgot this to fill in this area. So I think that's been encouraging. That I know people get scared of technology or they're worried because retirement is such a big deal, but a lot of our members are finding it actually is more helpful because it does provide that, oops, you forgot something kind of reminder.
We're definitely finding that the barrier to online applications is not the simplicity of the retirement process itself. It's getting to CalSTRS and the login responsibilities that they have. Many members still are challenged with that, but we have.
It's a tough security process.
We want to make sure we're very cognizant of the need to protect member information, to not allow mischievous entry into someone's account, and so we're working very diligently to make sure that we have all the appropriate security protocols so that there is no error in someone accessing a member's account and taking an action or making a decision that would have a negative impact on an individual member. So that process is never going to be a slam dunk, snappy, easy process, because we want them to believe, and we want to ensure that it is a secure way to have access to their information. But once members have successfully navigated through the online registration process, they're delighted with the online experience that's available to them. And the people who have utilized the online applications mirror what your experience has been, Sharon. That's been very positive reaction from those who've participated. And we're hoping that word of mouth, we're hoping that counselors pushing, we're hoping that additional encouragement by making the application itself a little more difficult to get will increase our participation in online services.
Ed, did you want to chime in?
Just just let you know, the communications is working closely with the Information Security Office to look at some of those things to try to figure out which ones are like really unreasonable to ask, and there's no way to ask and without jeopardizing security. So they are reevaluating some of the specific questions that are asked.
We just want to make sure that we don't have the stolen wallet information as the sole set of requirements.
Absolutely. Thanks, Peggy. All right, review for information requests. Carolyn.
You're correct, we do have some.
We have a few.
And I may need some help because
Sure,
it seems a
sure.
little complicated. So regarding the interest rates for, see, I have to make sure I have the right one. Let's see, the regular interest rates for the defined benefit program, I believe.
It would be the credited interest rate
Oh.
and the minimum interest rates.
I had that and didn't say it. So the
Okay.
credited interest rates, we need to find out about the rounding. So whether rounding to the 1/4%, why, first figure out why we did that in past, and then assess alternatives to doing that, and evaluate the cost versus, what that's gonna add to the system.
And also kind of the board, the precedence of the board in
What was the
1991.
rationale behind it?
Yeah, what was the rationale and kind of
The history.
And that's for, just so you, Carolyn, that's for B, C, and D,
Right.
just for clarity, correct? Is that
Yes.
correct?
Yes, I put that it was for any of the situations in which there is rounding. So that's B,
Yes.
C, and D.
There you go.
Okay, and then I think there was one more. Oh, about permissive service credit purchases. Have staff quantify the cost to implement the changes, including providing notice to members, and then compare the potential cost savings to the plan and do a study in 5-year increments, and also to analyze whether it will dissuade purchases and what the effect of that would be.
Also individual increments, I think it was 5 years.
It was 5 years and-
And individual.
year.
Okay, great.
Okay. And then we report back on that one in September.
In September.
Thank you.
Great, thanks, Carolyn. 7, we have our draft agenda for our next meeting. Does that need to, that one's for September, so we need to add this piece, correct? Yep. Okay. Let me go back to, and opportunities for statements from the public. Do you have any folks that want to say anything from the public? Hearing none, we adjourn the Benefits and Services Committee.